Hey people, I welcome you back to Caroline's Online Academy, and in this video, we're going to be looking at another problem from the chapter Dissolution of Partnership Firms, uh, in which you are being told to prepare the realization account. This is a 6-mark problem. It was asked in the sample question paper 2024-2025. Now, if you look at the problem, it looks like a lengthy problem, right? You have like 8 adjustments here and probably a very big balance sheet. But usually in board examinations, they don't ask such a big problem for 6 marks. Now, this has been asked for 6 marks in the sample question paper because sample question papers are usually prepared to teach you various things, okay, various adjustments and all that. Understood? So they try to cover all the adjustments in this question, almost all the adjustments in this question. It's a very beautiful question. This probably, gives you insight into everything that you need to know about realization account or solving realization account. Except for workman compensation fund, I think they've covered almost everything. Let's look at this question. Sunny and Bobby were partners in a firm sharing profits and losses in the ratio 3:2. Their balance sheet as of 31st March 2012 is as follows. Balance sheet of Sunny and Bobby as of 31st March 2012 is creditors, bills payable, employee provident fund. This is Sunny's loan, Bobby's loan, investment fluctuation fund, capital, Sunny and Bobby, bank fixed deposits, stock, investments, debtors, provision for doubtful debts, other fixed assets, deferred revenue expenditure, Sunny's loan. And then we have a lot of adjustments. And finally, they told you that you're required to prepare the realization account. So now, whenever you are required to prepare the realization account, the first step would be to transfer all the assets to the realization account and liabilities to the realization account in their book value. As I told you, you don't even have to read the adjustments. You just have to transfer all the assets other than accumulated losses, loan to partner, and bank, cash in hand. Other than that, everything else has to be transferred. So we'll start with fixed deposits. The good thing about this problem, fixed deposits, people have a confusion when they're solving a problem that, fixed deposit is also with the bank. So should we transfer it or not? No, fixed deposit is an asset, is an investment by the company. It is not cash in hand at bank or cash at bank. It is not a amount receivable on demand, understood or not? And therefore, it is an investment separately. So therefore, that has to be transferred. I'm writing the book value. You should transfer the book value to the realization account. To stock, the book value of stock is 86,000. So that I've written. To investments, the book value of investments in this question is 1,04,000, and that is also transferred. And then we have debtors. My dear children, this is why I like sample question paper problems. It teaches it is prepared in such a manner that everything can be taught through this problem. See, when you have debtors, less provision for doubtful debts, you have to transfer the full value of the debtors, understood or not? Gross amount of the debtors, which is 1,77,000. And you have to transfer provision for doubtful debts as a liability, understood or not, my dear children? And you're not supposed to transfer the net amount 1,65,000. That would be wrong. So you transfer debtors 1,77,000, the gross amount of debtors, and provision for doubtful debts will be taken to the liability, taken as a liability to the credit side of the realization account. Remember this, my dear children. A lot of children forget to transfer provision for doubtful debt. So what I recommend that you to do is, the moment you transfer debtor, if there is provision for doubtful debts, write it on the credit side of realization. Be done with it then and there. Okay, after debtors, we have other fixed assets to other fixed assets. And that will be 3,80,000, my dear children. And then we have deferred revenue expenditure. Deferred revenue expenditure is a accumulated loss, like profit and loss account, debit balance, miscellaneous expenditure, advertisement suspense expenditure. All of them are accumulated losses. They are not transferred to the realization account, my dear children. So don't transfer them to realization account. Sunny's loan. Sunny's loan is a loan to partner. Loan to partner is also not transferred to realization account. It goes to the debit side of the capital account when you prepare the capital account. Loan to partner on the asset side of the balance sheet in the question given will go to the debit side of the capital account of the partners. Remember that, okay? So now that we have transferred everything, we just add them and write in the outer column, and we move on to the liability side of the balance sheet. all third-party liabilities will be transferred, and there are certain rules with respect to certain things. I will tell you. Understood or not? As we do them. First, we have creditors for 1,90,000. It has to be transferred. So by creditors, as it is a third-party liability, creditors account 1,90,000. Then we have bills payable. Bills payable is another third-party liability, so that will be transferred for 1,10,000 account. 1,10,000 to the realization account. And then we have employee provident fund. Even if I told a million times in class, and every time that I'm solving the question, just because there is a word fund behind employee provident fund, these kids make these mistakes again and again and again, my dear children. Employee provident fund is not a reserve. It is a liability. It is a liability. Third party liability, which has to be transferred to the realization account. Just type it, just engrave it or tattoo it inside your brain or something, do something permanent, and remember that employee provident fund is not a reserve. It is a third party liability, and all third party liabilities will be transferred to realization account at their book value. So by employee provident fund. I'm not writing the whole thing, for want of space. You please write the whole thing in the exam. 50,000. So that's done. Then Mrs. Sunny's loan. Now, Sunny is the partner. Mrs. Sunny, according to law, is a third person to the partnership. A third party. Mrs. Sunny has given loan to the partnership firm. Mr. and Mrs. Sunny might be living together or not. Doesn't matter. When Mrs. Sunny gives loan to the firm, it is a third party liability and it has to be transferred to realization. Let there be no doubt about it. Only partner's loan will not be transferred. Third party loan will be transferred. Understood or not, my dear children? So by Mrs. Sunny's loan. Why I'm emphasizing on this? The reason I'm emphasizing on this is because my dear children in my classrooms again and again and again ask the same questions and make the same mistakes in all the test papers that they make. So I don't want that to happen. So remember that. Other than partner's loan, Sunny's brother's loan, Sunny's cousin's loan, Sunny's wife's loan, Sunny's son's loan, everyone else are third parties, and if they give loan, it will be transferred to partner's capital account. Understood or not, my dear children? That is 55,000. Now, Bobby's loan here in the balance sheet, Bobby's loan, no. You don't transfer to the realization account because it is a partner's loan. Partner's loan is paid after settling all the third party liabilities. Settling third party liabilities only happens to realization account. And therefore, Bobby's loan will not be transferred to realization account. Understood or not, my dear children? And then we have investment fluctuation fund. Now, this is another headache. It's actually not a headache, my dear children, but you people make it a headache. Investment fluctuation fund will always be transferred to realization account. Investment fluctuation fund will always be transferred to realization account. That's it. No more arguments. As far as CBSE is concerned, it is always transferred to realization account. Understood or not, my dear children? Now, when it comes to workman compensation reserve, there is a 1 mark question regarding that. With respect to that, I will solve it after solving this problem in this video itself, and I'll tell you how to do that thing. Okay, but investment fluctuation fund, let there be no doubts, it will always be transferred to realization account, though it's a reserve. It will be transferred to realization. All right, my dear children, so we've transferred all the assets and liabilities. Let's go ahead and look at the adjustments to try to understand how to account for their adjustments. Sunny promised to pay off Mrs. Sunny's loan. Mrs. Sunny's loan is a third-party liability. When the firm settles a third-party liability using its own money, The journal entry is realization account debit to bank account because money is going out of the firm. But the partner says, no, firm, you don't have to pay. I will take it over. I will pay. It means what? The partner has paid the firm's loan. So the firm have to pay the partner more. So the journal entry is realization account debit to partner's capital account. Whenever liability is settled, realization account is debited. When the firm pays, bank account is credited. When the partner pays, partner's capital account is credited. And therefore, the journal entry is realization account debit to Sunny's capital account in this case. Sorry, children. Just to keep track of what I've written here, I'm going to write in brackets Mrs. Sunny's loan. I recommend you also do that in the exam. So Mrs. Sunny's loan was how much? 55,000. So I've written that in the outer column. Moving on. Bobby took away stock at 20% discount and 80% of the investment at 10% discount. People all get confused and all. 80%, 20%. What? In one sentence, so many percentages are there. Don't get confused, my dear children. It's very, very simple. Break it down into simple, small phrases. Bobby took away stock. Okay, Bobby has taken an asset. A partner is taking an asset. What is the journal entry for that? When you sell the asset, the journal entry is bank account debit to realization because money comes into the business. When partner takes over the asset, the journal entry is instead of bank because money is not going to come because the partner has taken it over, right? Bobby's capital account debit to realization account. Okay. So we got to write Bobby's capital account debit to realization account. So by Bobby's capital account. Stop. This joker Bobby has to make our life difficult. So he wouldn't take it at book value. He will bargain and he's taking it at a 20% discount. Am I right or not, my dear children? So what am I supposed to do? What is the total value of stock here? 86,000. On this Bobby fellow got 20% discount. So 86,000 into 20%. So the total discount amount that was given was 17,200. So Bobby took the stock for 68,800. That's all. So one part of that sentence is over. Now coming to the next part. And he didn't stop there. Bobby didn't stop there. He took away 80% of the investment at 10% discount. 80% of the investment at 10% discount. Again, Bobby is very, acting smart and all that joker. He could not take the entire investment. He had to take only 80% investment. And he will not take it in book value also because he has to make our life difficult. He's taking it at 10% discount. But my dear Bobby, you know how to solve this. So you're not making it difficult for us actually. So you have 1,04,000 into 80%. 1,04,000 is the book value of the investment here. Into 80% will give the total amount that was taken over by Bobby. Total amount of investment that was taken over by Bobby. 1,04,000 into 80% is 83,200. But did Bobby take it for 83,200, the book value? No. That fellow has to do something funny. So he took it at 10% discount. 10% discount is 8320. So the value for which Bobby took over investment is 74,880. So let's record that also here. Investment 74,880. So that one is done. Now moving on to the next adjustment. Dharam, a debtor of 60,000 rupees, had to pay the amount due 2 months after the date of dissolution. 2 months after that only Dharam has to pay. But now we are closing the firm. Dharam, please pay us. We are asking him. And he's agreed to pay. And he's asking for some discount. He was allowed a discount of 9% per annum for making immediate payment. So he's asking, boss, I'm making immediate payment. 2 months early, I'm paying. No, give me some discount. So he told, okay, boss, you take 9% per annum discount. Understood or not, my dear children? Now, how to calculate the discount amount? A lot of people get confused here. So what is the total amount of debtors? That is different, 1,77,000. But Bobby Dharam is only 60,000. And for this fellow only, we are giving that 9% discount. How will you calculate discount? Pay attention, my dear children. I'm typing here. I'm typing here. 60,000 into here. I'm typing here. Here. 60,000 into 9%. If it was flat 9%, I would have stopped right here. But it was not flat 9%, my dear children. It was 9% per annum. So for one full year, 9% is a discount. Our fellow is paying us only 2 months before. Understood or not? So 9% into 2 divided by 12. So the discount is 60,000 minus 900. The amount paid by Dharam is 59,100. How did I calculate it? 60,000 into 9% into 2 by 12. If they're given the number of months, and if they told you that the discount percentage is per annum and not full amount, like they've given it here. You see? Discount percentage is 9% per annum. Per annum is a headache, boss. And this 2 months after date, he's paying 2 months before. 2 months after date only he had to pay. Now itself he's paying 2 months before. When you're calculating discount, you're supposed to, what are you supposed to do, my dear children? The total amount into 9%, and that is per annum. And now we are giving for only 2 months. So into 2, right? That's it, my dear children. So you're getting 59,100. Understood or not? But is that it? Is that the total debtors? No. For now, we'll record this. Now, debtors have been realized. We got money. So bank account will be debited and realization account will be credited. For all assets realized, we're going to do this only. Bank account debit to realization account. So we're supposed to write by bank in the credit side of the realization account. But in order to keep track of what is what, I'm going to write debtors below that, to keep track of what is what. Understood? And then going forward, creditors were paid 1,75,000 in full settlement. We paid creditors. So money is going out of the business. The bank account will be credited. Realization account to bank account. But the creditors are 1,90,000. We are only paying 1,75,000. It's okay. We are paying it in full settlement, my dear children. Full settlement. Now some people will come and say, sir, full settlement, no journal entry, no. That no journal entry is only when a liability is taking over a asset in full settlement. Then no journal entry. Your liability is not taking an asset. The liability is being paid some money. The journal entry is realization account debit to bank account. And we are paying less in full settlement. Therefore, it is by to bank creditors 1,75,000 we paid against the 1,90,000. But we don't have to bother about that 1,90,000 anymore. We're paying 1,75,000 in full settlement. Now another headache. Point E, 90% of other fixed assets realized 1,98,000 and remaining were realized at a discount of 15%. Now we have other fixed assets of 3,80,000. They couldn't just sell everything together. They had to divide it and make life difficult for you. They think they are making a life difficult for you, but it is actually easy marks, my dear children. Just listen to me. Sorry, guys. It's cold, yeah. 3,80,000 is the total other fixed assets. Let's divide. 90% of this realized 1,98,000. They've given in the question. It realized 1,98,000. You don't have to do any further calculation. They've told 1,98,000 was okay. So how much will be left? 10%. 10% of 3,80,000 is 38,000. Was 38,000. We are getting, we're realizing at a discount of 15%. So 38,000. From that, you remove the 15% discount, boss. 15% into 38,000. How much are you getting? 5,700. So how much is the remaining realized for? 32,300. Understood or not, my dear children? Did I do it correctly? 15% into 38,000. Yes. 15% with 30,000. It's 5,700. The remaining is 32,300. So totally other fixed assets realize how much, my dear children? 1,98,000 and 32,300. Let's add them 0, 0, 3, 0. So 1 goes at 10, 3, 3, and then 1. So 2,30,300. Understood or not, my dear children? So other fixed assets realized 2,30,300. I'm on right. Other fixed assets 2,30,300. Okay, that is done. Moving forward, balance of the investments were sold at 75% value and fixed assets were realized at 110%. Okay, the balance of the investments were sold at 75% value. How much? What is the balance of investment? Now, our Bobby, he took only 80% of the investment. The remaining is the balance of the investment. Total value of investment is 1,04,000. Understood or not, my dear children? That was 1,04,000 into 20%. The balance of the investment is how much? It is 20,800. But this 20,800 only realize 75% of its value. That will be how much, my dear children? 15,600. So, investments, the balance of the investments, 15,600. Okay. So that's done, my dear children. What else do we have? Fixed assets. It's not fixed assets. Actually, there's a typo here. It's fixed deposits. Fixed deposits were realized at 110%. What is the total value of fixed deposits, my dear children? 70,000 as per the book value. And it is realizing 110%. So, realized now by bank only, you're right. Okay. Fixed deposits is 70,000 into 110%, which is 77,000. So fixed deposits are done, my dear children. Moving forward, there was an old furniture which has been written off completely from the books. Okay, gone, gone. Bobby took away the same for 41,000 against his loan, and balance was given to him in cash. Okay. Oh, this is tricky, right? This is not something that we have learned in normal journal entries or the other journal entries and all we haven't learned. So this should be tricky, right? It's actually not tricky, my dear children. Once you know the logic to construct journal entries, everything is easy. Just pay attention to me. So Bobby's loan is being paid using a furniture, old furniture. So Bobby's loan is a liability. So you debit Bobby's loan account. Bobby's loan was in the question how much? 85,000. It's here. 85,000. Understood or not, my dear children? So 85,000. Now old furniture we given for that. No. Old furniture goes now. Old furniture asset only now. Whenever an asset goes out, realization will be credited to realization account. How much? 41,000. For remaining, we paid money. So to bank account, 45,000. Understood or not, my dear children? The journal entry here for this would be what? Always leave a few lines after by bank because you might have to write something there. By Bobby's loan account, 15,000. Understood or not, my dear children? Oh, no. 41,000, right? The assets were taken over for 41,000. Understood. So, yeah, 41,000. Just give me a second. Yeah. 41,000. Got it. So, now that is done. Then what do we have next? Realization expenses of 20,000 were paid by Sunny and Bobby equally on behalf of the firm. The expense has been paid on behalf of the firm. The firm is the main culprit here. Understood or not? It has to pay the expense. But who paid it? Sunny and Bobby, poor fellows. Whenever it is a firm's expense, the realization expense, whenever it is a firm's expense, you are supposed to debit realization account. And when it is paid by the firm, you write to bank. When it is paid by the partner, you write partner's capital account. And it was 10,000 and 10,000. Realization expenses were paid equally. The 20,000 was paid equally. Okay, so are we supposed we are done with the adjustments? Can you just close it? No. You cannot close it and all. You have to go through the balance sheet one more time and see if everything has been realized. Fixed deposits realized, stock realized, investments realized, debtors, no, debtors was not realized, my dear children. Only Dharam has been settled. That 60,000 has been settled. Remaining debtors, how much they paid, that has not been given. That information has not been given. If a tangible asset is there, and if they haven't told how much the tangible asset paid, then you're supposed to assume that the tangible asset was realized at book value. So out of the 1,77,000 data, 60,000 dirham is gone. So remaining 1,17,000 would have got realized in the book value. So here in data, it is 59,100 plus 1,17,000. Understood or not, my dear children? 1,76,100. So that is done. So data is done. Provision for doubtful debts is a internal liability. It will not be paid. Provision for doubtful debts, investment fluctuation fund are all internal liabilities. They will not be paid. Other fixed assets are done. Deferred revenue expenditure is an accumulated loss. Sunny's loan is a partner's loan. Loan to partner. It goes to the debit side of partner's capital account. Creditors have been paid. Bills payable, not paid. Employee provident fund, not paid. Mrs. Sunny's loan has been taken over. Bobby's loan will not come. Investment fluctuation fund is an internal liability. It will not come. So bills payable and employee provident fund have not been paid. What are we supposed to do? When the question does not mention how much should be paid for a particular liability, we're supposed to assume that that liability was settled in the full amount. So bills payable is 1,10,000 and employee provident fund, I'm going to write EPF here, is 50,000. Understood or not, my dear children? So now, after going through the balance sheet, we realize we have accounted for all assets and liabilities. We have realized all account assets and liabilities as per the instructions given in the question, and we have paid all the realization expenses. So now we can just tally it. Understood? Before you tally it, be careful. Just make sure you do all the addition, subtraction, and all that has to be done. My Excel is being very slow. It's stuck. Yeah. So let's just do the addition. Yeah, that's done. And similarly here, the addition. All right. So that is also done. Now we have added all the numbers and we find that the debit side total is 12,27,000 and the credit side total is 11,30,680. Which means what, my dear children? It only means one thing, and that is it is a loss. How much is the loss? 12,27,000 minus 11,30,680. Understood or not, my dear children? So that loss of 96,320 will be borne by the partners in their profit sharing ratio. Understood or not? So we have Sunny and Bobby, and the profit sharing ratio as per the question is 3:2. Understood or not, my dear children? 96,320 into 3 by 5 for Sunny and 96,320 into 2 by 5 for Bobby. Once you're done with it, problem is solved. But I'm not able to get it done because my Excel is just got hung. I don't know why. Yeah, finally. Okay, good. So the total loss of 96,320 has been accounted for. This is a beautiful question, my dear children. It almost talks about all the adjustments except for one, workman compensation reserve. I promised to solve that also, but I'm running out of time here. So I'm going to do that as the next. I'll do it along with all the other one-word questions videos that I will be doing. If you don't understand anything in this explanation, kindly do leave a comment so I can teach you later. For now, you people have fun. Take care and bye-bye. See you with another question. I'll be solving all the questions in the question bank, the link to which is given in the description. It's a question bank. This question bank is a compilation of all the questions that are given in this that happened to come in the previous year questions and sample questions that are questions. Share, subscribe, like, and leave a comment if you like the video. Bye. Take care.